The one big beautiful bill has been signed into law, and your bank account could be directly impacted. From expanded deductions to updated tax credits, the sweeping legislation brings a range of changes that every taxpayer should understand. And here to help us do just that is our resident CPA and friend, Fox 24 News Now, Thomas Spade. Welcome back.
Thank you for having me back.
So did you read all 10,000 pages or?
Mostly I stuck to the parts that have to do with tax. And as I'm looking through this, I'm thinking to myself, it's one big beautiful bill. And this goes to prove one thing, beauty totally in the eyes of the beholder.
That is such an excellent way of putting it, because I think while there are new rules that can certainly benefit some people, others are excluded, and we'll get into all of that. But I want to start with this one. So you've had a chance to review some of the verbiage here.
Oh, yeah.
And what are some of the ones that really stand out to you in particular?
Okay, well, a couple of things stand out to me in particular. The first thing is that they made all of the stuff from Tax Cuts and Jobs Act permanent, or at least most of it. The big things are the increased standard deduction made permanent, the tax rates that were put in place back in 2017 made permanent, miscellaneous itemized deductions gone forever with one exception, but that was made permanent. Now, if you recall, I was on here a couple of months ago and I said if Congress didn't act, I would show up on my Elvis jumpsuit. Notice I am not in my Elvis jumpsuit. So
yes, okay, all right. And there are some new perks for seniors.
There is a new perk for seniors called the senior deduction. Now, this is on top of every other deduction that they might get.
Okay.
And it's $6,000. Now, if you're over 65, you automatically get it. If you're married, your spouse gets it. But if you make too much money, which is about $150,000 if you're married, $75,000 if you're not, then that $6,000 deduction starts phasing out a little bit. So you wouldn't get the full benefit if you made too much money.
Okay, all right. Let's talk about the higher cap on state and local taxes. So is this called the SALT deduction?
This is the infamous SALT deduction,
okay.
Yes. SALT, not just for margaritas anymore. In this case, $40,000 is the new cap. It used to be $10,000, and here's how it worked. You added up all of your state and local taxes that were withheld from your paycheck, any state and local taxes paid with last year's return, property taxes paid on your house last year or any other real estate, property taxes on your car, you add them all up. Now, if they were under $10,000, you got to deduct all of them. But if it was over $10,000, it got capped at $10,000 and there was no way around it. So you only got the benefit for the first $10,000. Now, that's been kicked up to $40,000.
Right.
So a lot of people that have higher property taxes and find themselves in a higher tax bracket are going to benefit from this quite a bit.
I was going to say, this really kind of benefits people who live in high tax states like California, New York, places like that.
It does, but it also will affect some people here locally.
Will it?
Yeah, I think so, because if you think about it, if you've got two people that are working like husband and wife and they find themselves in a higher tax bracket and decide, you know, they want to get a bigger house. Well, I don't know if you've noticed the real estate prices around here, they keep going up. Yeah. And guess what property taxes are based on? The value of the house. So property taxes are going up for everybody, and this is going to help prevent people from getting hit too hard.
I see. Okay, very good. There's also a push to encourage people to buy U.S.-made cars. So there is an incentive there if the car is assembled here in the United States.
Only if the car is assembled here in the United States, and only if it is new, and only if you are buying it for not business use, and only if you are not leasing it. So
I see the number shrinking little by little of the people that actually qualify for this.
True, but I think you're probably going to see a lot more cars that are built here in the U.S. But here's the thing, a lot of cars are built here in the U.S. that you wouldn't think about. Like the Toyota Corolla is built here in the U.S. The Honda Accord's built here in the U.S. The CR-V is built here in the U.S.
Oh, I didn't know.
And of course, America, the Ford Mustang is built here in the U.S.
As it should. Yes, and do you think that you anticipate people when they walk onto the lot that they're going to ask first, is this car built here in the U.S., or only show me the cars that are built here in the U.S.?
I have a feeling that some people are going to do that just because they want to get a tax break for it.
Absolutely, as they should, right? All right, well, this is probably a good place to take a break. So when we come back, we're going to talk about the no tax on tips as well as the overtime, which I think there's a couple of caveats in there as well. We're going to do that in 2 minutes. Don't go anywhere. We'll be right back. Welcome back. Before we continue to no tax on tips and overtime, when does all of this take effect?
Well, a lot of this is going to take effect at the end of this year.
Okay.
So the thing about the cars, that's going to take effect at the end of this year. But some provisions are going to take effect in 2025. Some will take effect in 2026. In fact, the bulk of them take effect in 2026. 2027 actually is when even more things happen. So there's a lot in this bill that's not just going to happen overnight.
So, all right. So without further ado, let's talk about the no tax on tips. So is that something that's going to happen immediately?
This year.
Oh, it is. Okay, because these are campaign agenda items that both presidential candidates were running on.
It certainly was, and I really hope the IRS prepared for this, but I have a feeling they already did. And here's how this is going to work. No tax on tips, as they call it, is going to be no tax on the first $25,000 of tips and the first $12,500 of overtime. Now, here's how this is going to work on your tax return. You're going to report all your wages, salaries, and tips in full on your tax return. That's still going to show up on your W-2. But then you're going to deduct the tips from it, and you're going to deduct the overtime from it. My guess, there's probably going to be a separate schedule with the tax return that you're going to have to file. Your W-2 is also going to show how much you got in tips. It actually already does if you look at your W-2.
Oh, okay.
But now they're going to have to separately report the overtime. And they've also directed the IRS to figure out a way that if you are paid as an independent contractor and you're allocated some tips or you're paid for some overtime, that they need to now put something on the 1099 that's going to show those extra amounts of tips and overtime so that you can deduct it for this purpose.
Okay.
The bill said, interestingly enough, that the IRS had about 60 to 90 days to issue regulations and say how this was going to work. This is going to go in effect for tax year 2025. But there are a couple of caveats. First one, if you make too much money, you're not going to qualify for the full benefit. That's $300,000 if you're married, $150,000 if you're not. The second part is no tax on tips is not exactly telling the whole story.
You're right, yeah.
Because notice,
read between the lines.
Notice that I said you're going to wait until you report on the tax return and you're going to deduct it. Well, what gets withheld from your paycheck? Social Security and Medicare.
Sure. Yeah.
That's right, and that's withheld on your tips.
Oh, I see.
So you're still going to have Social Security and Medicare on your tips, and you're not going to get it back. You're still going to have Social Security and Medicare on your overtime. And no, you're not getting that back either.
Okay.
Medicare is broke. They need all the money they can get.
So it's not a full dollar. There's still going to be a chunk taken out.
Exactly, 7.65%. And oh, by the way,
more?
there's more. This expires at the end of 2028.
Yes, so this is the length of the actual administration.
Exactly.
Unless it gets extended, which
you stole my thunder.
Oh, I'm sorry.
I was about to say what else happens?
Teacher. You're such a good teacher, though. I picked up on it, so I appreciate
fine.
that. Okay, so you did cover no tax on tips. You did cover overtime.
Yes.
So that basically is kind of how it is. You mentioned the 1099s. So has anything changed with 1099? Do you get a little bit extra?
We do, and this is great news, actually.
All right.
The limit for you to get a 1099 currently $600. If you receive $600 as an individual from a particular payer within 12 months, then you have to get a 1099. That is now $2,000. So less 1099s have to be issued.
All right. Well, I like that. That sounds pretty good. Finally, this is the last item here. Trump accounts. What is a Trump account? It kind of sounds like a 529.
It's kind of like a 529, but different.
Okay.
What this is trying to do is encourage children to save and
good.
parents to teach their children to save. So the way this works is there will be these accounts. The kid has to be under 18 by the end of the year when you open the account. And by the way, this doesn't kick in until next July because the law said it doesn't take effect for 12 months until after it's actually signed into law. Government will kick in $1,000. You can put in $5,000 a year tax-free on behalf of your kids. Your employer can kick in up to $2,500 as a tax-free fringe benefit.
Does it accrue interest?
It does.
Okay.
It's invested just like an IRA, but you don't pay tax on the earnings until it's taken out. When it's taken out, depending on what you use it for, will determine how the earnings are taxed. If it's used to start a business, buy a first home, or for education purposes, then those earnings are taxed as capital gain, which is at a lower rate, which is actually kind of awesome. But if, however, you use it for something else, tax as ordinary income.
So you do get to use it for something else,
But there's a catch.
But there is a catch. Wonderful. Thomas, thank you so much as always.
Thank you for having me.
You've made it so clear.
I tried.
Now I understand.
Yeah.
Beautiful bill. We'll be back after this.